Hi friends, welcome to my YouTube channel Homely Studies. Today our topic is about basic financial statement in entrepreneurship. Firstly, you should know about financial conditions of firm. Okay, a written report of the financial conditions of a firm. Okay, financial statement includes the balance sheet, income statement, and statement of cash flowing. Okay. Financial statement includes an income statement, balance sheet, and cash flow statement. Income statement. The income statement measures all revenues sources. The major components of the income statements are following. They are sales, cost of goods, gross profits, operating expenses, depreciation, other income statements and expenses, net profit before tax, income taxes, balance sheet, current assets, fixed assets, long-term assets all comes under income statement. We'll explain about one by one. First one, sales. This is the gross revenue, okay? Generated by sales of clothing, list returns, cancellations and allowances. Simply, sales is nothing but reduction in price for discounting. Discounts are taken by customers. Okay, that is said to be as sales. Next one, cost of goods sold. That means this is the direct cost associated with manufacturing the clothes or products. Cost including materials. Okay, use it direct labor, plant, manager salaries, and others associated with operating a plant. I will say one example utilities, equipments, repairs, etc. This all comes under cost of goods sold. Next one, gross profit. Gross profit represents the amount of direct profit, okay, associated with the actual manufacturing of clothing. Okay, it is calculated as sales less the cost of goods sold. That is said to be as gross profit. Next one is operating expenses. That means these are the sailings. Okay, operating expenses are the sailings and administrative expenses that are necessary to run a business. Okay, that means I will say one example, you will, by that you can understand. It includes office salaries, insurances, advertising, sales, commissions, rents, etc. These are comes under operating expenses. Okay, next one, depreciation. Depreciation is the expense is usually included a operating expenses or cost of goods sold, but it is worthy of special mention due to unusual nature. Okay, depreciation results when a company purchases a fixed assets and expenses. Okay, it is the entire period of planned use. Okay, not just for year purchase. Okay, depreciation is a non-cash expense. Okay, it is a cash flow on when asset is purchased, but the cost is taken over a period of years depending on type of asset. That is said to be as depreciation. Other income expenses means are the items those are don't occurring due to normal course of business. Okay, business operations. For instance, okay, a cloth makes does not normally earn income, right, from rental property or interest on investment. No, like that. Next one is net profit before tax. That means the figure represents the amount of income earned by the business before paying tax. Okay, before paying tax. The number of computed by adding other incomes or subtracting if other expenses exceed other incomes, okay, to operate profit. Next one, income tax. This is the total amount of state and federal income tax. Okay. Next one, what? Balance sheet. Balance sheet provides a snapshot of business assets, liabilities, and owner's equity for a given time. That means simply balance sheet is nothing but it says financial position of a company or a firm. Okay, that is said to be as balance sheet. Next one, current assets. Current assets are in a business that can be converted into cash in 1 year. of less. Okay, they include cash, stock, other liquid investments, account receivable, inventory, and prepaid expenses. This all are comes under current assets. For a clothing manufacturer, the inventory would include raw materials like yarn, thread, work in progress, started but not finished, no, like that. Unfinished goods, shirts and pants, ready to sell to customers, no, like that. This all are comes under current assets. Next one, cash flow statement. Cash flow statement is one of the most useful financial management tool. Okay, you would have run your business. The cash flow statement and income statement measures financial activities over a period of time. Okay, the cash flow statement also tracks the effects of changes in balance sheet account. Okay, the balance sheet is divided into four categories. Okay, first one is net cash flow from operating activities, net cash flow from investment activities, and the third one is net cash flow from financial activities, and net change in cash and marketing. That means I will explain clearly. See, first one, net cash flow from operating activities means it net cash flowing, okay, it from operating activities. That means it consists of internal activities. That means operating activities of daily internal activities of customers. That means that includes cash paid to suppliers and employees, cash paid for operating expenses, interaction, taxes, and cash revenue from interest, dividends. This all are comes under operating activities of internal activities. Okay. Next, second one is net cash flow from investment activities. It consists of investments made by management. That means investment activities are discretionary investments that made by management. This primarily consists of purchasing or selling of equipment that is said to be as investment activities. Next one, net cash flowing from financial activities. It consists of financial activities of external sources. That means financial activities are the external activities, okay, external sources, and used for cash that affect cash flow. This includes sales of common stocks, changes in short-term loans, long-term loans, and dividend paid. These all are comes under financial investment activities, financial activities. Next, last one, net change in cash and marketing securities. That means it includes marketable securities caused by business fluctuations in cash flowing of statement. That means the results of the first three calculations are used to determine the total change in cash and marketable securities. It is caused by fluctuations in operating investment financial cash flow. Okay. It cash reflects on the balance sheet from period to period to verify the calculations has been done correctly. Understand? This is about categories of cash flow statement. This is about basic financial statement in entrepreneurship. Please like, share, and subscribe to my YouTube channel, Homely Studies. Thank you for watching.